Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the cracks are beginning to show in the gold and the silver market. Right now, the lease rates on both gold and silver are skyrocketing, and this is an indication that a shortage is brewing. At the same time, queues at the Bank of England to get your hands on gold have increased in duration from a day or two to several weeks. And yet, simultaneously, as gold breaks out to record all-time highs and silver makes an important technical breakout and shortages are developing, retail investors are actually selling their gold and silver. And there are bullion products like silver bars and silver coins and gold coins that are historically cheap to stack right now. So to me, this all means that it is a good time to be a stacker. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Okay, so let's start off with the charts of the metals before we get into this news of a developing shortage in the gold and silver physical bullion markets. So the spot price of gold down a few bucks today, but considering the fact that gold has been smashing record all-time high prices every day for the past week or so, I think it is a little bit overdue for at least a consolidation here. The silver price also closed slightly in the red today. However, it did rally significantly off of the lows of the day. And you'll note here that the silver price closed above this trend line, which dates all the way back to the beginning of silver's major bull market back in February of last year. Now, that bullish development for silver is confirmed by the price action that we have witnessed in copper this week, which has broken out above this trend line, which dates back to May of last year when copper was hitting record all-time high prices. And you can see it is a significant breakout on good volume and big price moves in copper. What's good for copper is good for silver, as both metals are major industrial inputs. So this is definitely a good sign for silver. Now let's get into the news surrounding spiking lease rates and a potential shortage in gold. And this also extends to silver. This is out of Bloomberg. Gold dealers sell BOE bullion at discount in tariff turmoil. There are reports of weeks-long queues at the Bank of England to get your hands on gold. And as they lay out in this article, as a result, dealers are quoting prices for gold at the Bank of England at discounts of more than $5 an ounce below spot price. Now, that might not sound like a big deal, but that is extremely unusual. And typically, gold at the Bank of England trades lockstep with the spot price. Now, the reason that the gold at the Bank of England is trading at a discount is because of these queues and these delays in getting the gold out. Now, they say that these delays are because of the sudden spike in demand and that they're not set up as a commercial facility to handle this volume. And because of the concerns about tariffs and trade wars, investors are scrambling to get gold into the US. So when they have to wait, they are paying a discount for that gold. They're willing to pay more if they can get delivery faster. Part of the problem is that the 400-ounce bars in London can't be directly shipped into New York. They have to reprocess these into 100-ounce bars. So there are bottlenecks here which are slowing down this process and contributing to these queues. However, it does make one wonder, is the gold really there? I think we all remember this story from 2023 when there was a lot of uncertainty surrounding the banking sector in the US, when JP Morgan bought $1.3 million worth of nickel stored in an LME warehouse, which turned out to be stone. But I'll let you draw your own conclusions. Let me know what you think in the comments down below. The official word is that these queues are simply because there are these bottlenecks and they're really not set up to handle this volume of gold withdrawals. John Reed, he's an industry veteran and a senior market strategist at the World Gold Council, says, I suppose having their gold at the Bank of England is a decision that some people may be regretting at the moment, and maybe that'll cause them to rethink it and keep it with a commercial vault, albeit at a higher expense. And this really just goes to show that the old adage, if you don't hold it, you don't own it, is absolutely true. And when there's a third-party custodian for your metals, you are really at their whim, and there is a counterparty risk, as opposed to the metal that stackers get their hands on. Gold and silver are unique. When you actually have the bullion, you have it. You don't have to wait in a queue to get your metal. Now, another effect that this perceived shortage in the bullion market is having, and one place you can see it, is in the lease rates for bullion, which are typically close to zero. Those have jumped up to 4.7% in the gold market. They've got a chart of these rates here, and you can see that it's very unusual for them to rise above zero. Now, I'm not an expert trader. I'm not an industry insider. I'm just a stacker. But when I look at this, what this tells me is that typically if it costs almost nothing to borrow something and then suddenly the rate spikes up to almost 5%, that indicates that there is a shortage of that material and there's not enough of it to go around, so you have to pay more to borrow it. Now, I mentioned that this extends to silver as well, and you can see from this chart that was shared by James Anderson over at x.com, who's great to follow, by the way. If you don't follow him, shout out to James. He posts a lot of great gold and silver market data, so give him a follow. You can see here that these rates on silver leases also have skyrocketed. In fact, they are higher than the lease rates in gold, over 7%. So this shortage situation extends to both precious metals. And I thought this was an interesting document. This is the Mineral Commodity Summaries 2025 from the USGS regarding silver. And this shows you why industrial users and institutions inside the United States want to get their hands on as much physical silver as possible right now. And that is because we import a lot of silver. We are the world's #1 importer of silver. You can see in 2020, we imported 6,730 tons. Last year, we imported 4,200 tons. And every year, we're importing just thousands of tons of silver. And where do we get that from? Well, we get 44% of it from Mexico, 17% from Canada, and those are the two countries which may have tariffs imposed on them in a month. Yes, they've been delayed thus far, but Trump has only delayed the tariffs by 30 days in both instances. The threats of a trade war are still very real, and if that goes into effect, there has been no mention of an exclusion for precious metals from those tariff lists. So if we do get a 25% tariff on Mexico, that means that 44% of silver that we import from them is going to become a lot more expensive. Silver already located domestically in the US, well, it's going to be more valuable. And if you're stacking some physical precious metals, one thing you don't want to do is make costly mistakes. So how do you avoid that? Well, you could read the Smart Stacker's Guide to Avoiding Costly Silver Bullion Mistakes. You can get a copy of this 5-page free report by signing up for my newsletter with the link down in the description. It doesn't cost you anything. I don't spam you. I send out maybe one email per week with gold and silver market analysis. And another benefit of signing up for the newsletter, if there is ever breaking news in the gold or silver market, and these days things are changing at a lightning pace. You know, you got gold breaking out to record all-time highs. You got potential shortages developing. There's a lot going on. If I ever do want to send out a rapid alert to you, the fastest way for me to get in touch with all of you is via the newsletter. So make sure you sign up for that with the link down in the description. When you do, you will get a welcome email with a free copy of this report attached as a PDF. While institutions, banks, industrial users, in the case of gold, central banks are loading up on the precious metals right now, one thing that is not in high demand is physical silver bullion for retail investors. Talking about gold coins, gold bars, silver coins, silver bars, and silver rounds, the stuff that stackers love. Now, I found this old tweet from, once again, James Anderson, back from October 6th of 2022, and he was talking then about Silver Eagle premiums. The premium over spot at that time was around 75 to 80%. And this is from the SD Bullion sell page. So this is how much SD Bullion was paying for Silver Eagles back then. The spot price plus $11, or spot price plus $10.50. Well, right now, look at what SD Bullion is selling Silver Eagles for. $349 over spot. And Monex has this chart, which shows you the actual price of a Silver Eagle. Now, if you go back to May of 2023, when there was all this concerns about the financial system, Silicon Valley Bank had collapsed. Everybody wanted to get physical bullion. Back then, the spot price was under $26. I think on that day, May 9th, 2023, the spot price was around $25.66. And the price of a Silver Eagle coin was $39. So the spot price was about 25% lower than where it is right now. But the price of an actual Silver Eagle coin was several dollars more than it is today. And by the way, I just picked up another tube of Silver Eagles from the sale over at SD Bullion. Not financial advice, just telling you what I'm doing as a stacker. And it's not just the Silver Eagles. Junk silver remains incredibly cheap. $20 St. Gaudens pre-1933 gold coins. They're not making these anymore. The price on these right now is about 1.3% over spot. Now, not to plug SD Bullion too much, but this is just an example of how low the demand is right now for these retail bullion products. And this shows us that what is really driving the bull market in the metals has nothing to do with mom and pop investors, with stackers. In fact, retail investors right now are selling their bullion into the market. That's why premiums are so low. Dealers are trying to move this stuff. What is driving the market right now is the banks, the institutions, the central banks loading up on hard assets because they see what is coming. Deficits, inflation, trade wars, massive unsustainable debts, which will lead to a financial crisis. So they're loading up on the metals. And now is an incredible opportunity for stackers to get their hands on some of this stuff while the demand is low. Again, not financial advice, not telling anybody what to do, but if you've been thinking about becoming a stacker, now is probably a good time with the premiums being historically at the very low end of the spectrum. I haven't stacked Eagles in years, and yet I just ordered a tube of Eagles. So let me know what you think about this developing shortage in the comments down below. There's clearly not a shortage in retail bullion products. And again, I view that as an opportunity for stackers. But are you stacking at these prices? Are you waiting for a decline? Do you think there will be better prices on the horizon, or do you think this is the bottom for the metals? Leave me a comment down below to let me know what you think. If you want to see more videos like this one, check out the video popping up on your screen right now. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.